Thank you for joining me this Friday, the 14th of October. I'm Grady for Market Analyst with Bell Direct. This is the weekly market update. Over the last few months, we've seen a shift from growth investing to value investing through diversification into defensive investments and stocks that perform well in a high inflation, high interest rate, contractionary environment. Investor sentiment is low across global markets, making the global economic outlook more difficult to predict, given the UK and Europe are on the verge of recessions, which is leading investors to search for possible stocks with potential stronger cash flows in these uncertain times. Now the question arises, which stocks should you consider in the current market conditions? Retail stocks have been beaten down this year by investors amid rising interest rates set to cause lower consumer spend. But Best and Less, BST, has a buy rating from Bell Potter with a price target of $2.90, up from the stock's current price of $2.36. Bell Potter sees a shift to conservative in consumer spending in retail, which Best and Less is a leader for in Australia and New Zealand markets. BST has products that are less discretionary in nature and require a higher replacement cycle. In previous economic cycles, BST has shown resilience in sales and revenues, which the company is well positioned to benefit from at this current low in the markets amid the increasing shift to value spending. In the post-pandemic or post-COVID era, the company is also looking at expansion through a plan to open 11 new stores in FY23. The banks are also tipped to perform well in a rising interest rate environment due to hikes in the cash rate, increasing the margins on variable loans passed on by the banks to the customers. New business may be lower, but their existing loan book benefits from higher interest rates and continue to grow. As quarterly updates are being released, look for an increase in the provision for doubtful debts on the bank's profit and loss statements, as this will outline an increase or decrease in the amount of defaults on loans each of the big banks are expecting as interest rates rise and make some loans unaffordable for customers. Lastly, we all need to eat and drink right. Knowing this, we take a look at consumer staples stocks that have performed well during the pandemic and are performing well post-pandemic. Endeavour Group spun out of Woolworths in June 2021 and its share price is up 10.5% at $6.74 per share since its debut. The company reported group sales of $11.6 billion, profit surged 11.2% from FY21 to $495 million, and the company's net debt was reduced by $56 million due to a reduction in borrowings. Former parent company of Endeavour Group, Woolworths, ASX, WOW or WOW, is another stock that is poised to benefit from rising prices in the new calendar year. The supermarket giant announced a price freeze on almost 200 essential trolley items to ease the financial burden on customers already experiencing the sky-high cost of living. But the price freeze promise ends in CY23, which may see Woolworths hike prices to mitigate inflationary pressures. Woolworths shares are currently trading at a heavy discount, down 17% over the last year to $32.96, and look favourable to gain momentum when the price freeze ends. Understanding the current market volatility and cycle we're currently in, it is important to reassess your strategy and adapt to value investing as the cycle for growth stocks continues to decline with no low point in sight just yet. Locally, the ASX was sharply sold off to start the week following stronger than expected jobs data out of the US, which was released late last week, which dampened investor sentiment in markets around the world. The 2022 favourite sector, energy, took a hit this week amid the declining price of oil, which OPEC Plus aimed to stabilise last week by cutting daily oil production by 2 million barrels per day. Companies began releasing market updates later in this week, with Qantas topping the charts, soaring 8.7% after announcing it expects to make a first half profit between $1.2 billion and $1.3 billion, which is a very sharp recovery from the $1.9 billion loss before tax in FY22. Bank of Queensland also soared 11% to have its best session in 2 years during the week and topped the ASX 200 this week after releasing its FY22 annual report, including NPAT up 15% to $426 million. On the losing end, Imugene tumbled 12.82% this week, despite no price-sensitive news out of the biotech company. While John Lyng's group tanked 11.65% after the company's CEO, Scott Didier, sold 4 million shares, which is 7.5% of his holding in the company. Taking a look at the All Ords, MoneyMe led the gains this week, adding 20%, while Elmo Software soared 19% after confirming it has received and is in discussions with a number of parties over potential takeover offers. Poseidon rounded out the top 3 winners on the All Ords this week, adding 16.3%. Aurelia Metals tanked 34% this week as capital raising rumours overshadowed the company's Federation feasibility study. Corp fell 31.5% from Monday to Thursday, and Baby Bunting lost 29% after the company issued a warning about its gross profit margin as it fell 208 basis points over the prior corresponding period to 37.2%. The most traded stocks by Builder clients from Monday to Thursday were Coles Group, Mineral Resources and Whitehaven Coal. Investors also bought into New Hope Corporation, CSL and Core Lithium, while taking profits from BHP, CBA and Qantas. And the most traded ETFs this week were BetaShares Strong Bear Hedge Fund, BetaShares Geared Australian Equity Hedge Fund and BetaShares US Equities Strong Bear Hedge Fund. On the economic data front next week, the RBA's meeting minutes from October will be released on Tuesday, giving an insight into just how dovish the RBA is with regards to future interest rate hikes. Australia's unemployment rate for September is also out on Thursday, with the market expecting a drop to 3.4% for the month. And that's all we have time for today. I'm Grady Wolf from Bell Direct. Have a lovely Friday, enjoy your weekend, and as always, happy investing.